Yeah, having done the first illustration, which is quite simple, let's look at something a little bit more uh, challenging compared to the first one that we just did. So this is the part 2 class. So this is an illustration for accounting equations. Okay, so let's go. Here we have, from the following list of balances, you're required to use accounting equations to show the value of the following: gross profit, net profit, EAT, total asset, and total liabilities. So we have all the items: sales, land, purchases, returns inward, carriage inwards, rent, purchase, warehouse expense, motor vehicle, equipment, bank loan, bank overdraft, other indirect expense, capital, tax. Here they say it's 32% of net profit, debtors, and other items here. Then we have cash here for the 5,000. So from this list of balances, we've been asked to calculate what? Gross profit, net profit, earnings after tax, total asset, and total liability. So let's do the first one. The first one says gross profit. Remember the equation. What is the equation for gross profit? Remember, we expanded the profit to gross profit and what? Net profit. We said gross profit is turnover minus direct cost. So we expanded turnover to sales minus returns inward, and expanded what? Direct cost to what? Purchases plus carriage inward minus returns outward. So those items of expansion is what we're going to be looking at for here, to what arrive at what we've been asked to calculate. So gross profit is what? Turnover minus direct cost, T minus DC. So what's the makeup of your turnover? Sales and returns inward. So we have sales and returns inward. So what's your sales here from the question? 500,000. That's 500,000 here. What's your returns inward from the question? Returns inward, we look at it. The returns inward here is 50,000. So we have sales and returns inward. So sales is 50,000, returns inward is 50,000. Sales is 500,000, returns inward is 50,000. Okay? So 500,000 minus 50,000, bracket here means minus, will give you 450,000. So that means our turnover, based on what the question we have, which is sales minus return inward, is 450,000. Now the direct cost is a function of what? Purchases, carriage inward, and what? Returns outward. So we say purchases plus carriage inward minus return outward. What's purchases? The cost of buying the item. And then you spend money to bring the items here, is carriage inwards. You return some back to the supplier, that's returns what? Outward. So let's get the items. What are purchases here? We have 280,000. That's what you have here. What are carriage inwards? Here we have 35,000. Do we have returns outward? Let's check. There is no returns outward. So returns outward is what? 0. So that means here we have purchases 280,000, carriage inward 35,000. So if you add 280 plus 35, you have 315,000. So your direct cost, which is purchases plus carriage inward minus return outward, is 315,000. So remember the formula: gross profit is T minus DC. T is turnover, DC is direct cost. So direct cost here is 315,000. Turnover here is 450,000. So 450,000 minus 315,000 gives us 135,000. That is our gross profit. The next one says what? Net profit. Remember the formula for the net profit, the equation for the net profit? Equation for net profit is gross profit minus indirect cost. Indirect cost is other costs, okay, that are not related to bringing the product in, like rent, warehousing, advertising, and all of that. Okay, so what are the indirect costs that we can see here? I can see rent, I can see warehouse expenses. What else? I can see other indirect what? Expense. So basically, our net profit is what? Gross profit minus indirect cost. We already know our gross profit, which is 135,000. We bring it here. So what are the indirect costs? Rent, warehousing, and other indirect expense. Rent is 58,000. Warehousing is 25,000. Indirect expense or indirect cost is what? Other indirect cost is 32,000. So if you add all together, our total indirect cost is what? 115,000. So 135,000 gross profit minus 115,000 indirect cost gives you a net profit of what? 20,000. The next one here says earnings after tax, which is known as profit after tax. And what's our tax? Remember, what is earnings after tax? It's simply what? Profit, net profit minus what? Tax. Okay? So what's our tax? They say our tax is 32% of net profit. Okay? So let's go. Earnings after tax or profit after tax. Formula is what? Net profit minus what? Tax. What's our net profit? 20,000. What's the tax? 32% of net profit, which is 0.32 times what? 20,000. That's 6,400. So 20,000 minus 6,004 gives you 13,600. That is your earnings after tax. The next one says total assets. Remember, what is the makeup of our total asset? We expanded it to what? Non-current assets, also called fixed asset, plus current what? Asset plus other assets. Okay? So what are the non-current asset items? We have land, we have motor vehicle, we have equipment. So what are the current asset items? We have debtors, we have cash. Is there any other asset? No. So it means that our total assets, which is non-current asset plus current asset plus other assets. The non-current assets here, we have land, motor vehicle, equipment, which is 240, 350,000, 250,000. So total non-current asset is what? 840,000. Our current asset is a function of debtors and cash based on the question. So debtor here is 55, cash is 45. Total non-current, total current asset is what? 100,000. So 100,000 plus 840,000 is 940,000. Other asset is 0. So total asset, which is non-current asset plus current asset plus what? Other asset is 940,000. The next one says total liabilities. We have expanded our total liabilities to what? Long-term liabilities, short-term liabilities, okay, and owner's what? Equity. What are owner's equity? We also expanded to what? To initial capital plus any profit what? Made minus any withdrawal by him for his personal use. So we can come here now. Total liabilities is long-term liability plus short-term liability plus owner's equity. So what is our long-term liability based on the question? Is bank loan. That's the only item there. Bank loan, which is 600,000. So our total long-term liability is what? 600,000. So what are our short-term liabilities? We have unpaid tax. Remember the tax that we completed, it has not been paid, so it becomes what? A liability. We have bank overdraft. That's in the question as well, 120,000. So if you add 120 plus 6,004, you have 126,400. So total short-term liability is what? 126,400. Now, owner's equity is a function of what? Capital, profit, and drawings. So here we have capital of what? 200,000. Okay, so our capital in the question. Our capital in the question, look at it here, is what? 200,000. So we have capital 200,000. Remember I said any profit made by the business becomes what the business also owes the what? The owner. So the capital of the owner can increase by the profit or reduce by the loss. So here there's a profit of 13,600. So that increases the capital. So owner's equity here is 213,600. So our total liability, which is long-term liability, short-term liability plus owner's equity, is what? 600,000 long-term liability, 126,400 short-term liabilities, and what? Owner's equity of 213,600. So when you add this plus this plus this, you have now around what? 40,000. Remember I told you that at any point in time your total asset must be equal to your total liability. Now, what's your total liability here? 940,000. What's your total asset here? 940,000. 80,000. Now that is using accounting equations, to express activities of a business and the business position of the same business in terms of resources owned and debt owed to others. Remember, accounting equation here is not the same as accounting ratios. Accounting ratios will be treated in another class. Ratios have to do with relationship between one item and the other item for possible interpretations. We will look at that in other class. Now, accounting equation, the beauty of accounting equation is that it's a basis to help in preparing financial statements. If we are able to understand accounting equations, preparing financial statements will not be a challenge. You understand? So, because this is the foundation upon which financial statements are based. So, basically, our income statements or comprehensive income statements and our statement of financial position, which we also call the balance sheet, it's easy with an understanding of the accounting equation. Aside from the dynamics of accounting, that vary from industry to industry. That can also be, what it looks like using accounting equation, because sometimes terms will change based on industries, but we are actually talking about the same thing in different, approach. But, the good thing about it is that aside from the dynamics of accounting, which is regulatory and vary from industry to industry. For instance, if you're in the banking sector, you will be looking at regulatories from maybe the Companies and Allied Matters Act, both here, even the CBN. For instance, in the bank, there's a way they classify their loan portfolios based on what they call the prudential guidelines. We have substandard facilities, we have doubtful facilities, and then we have lost facilities. This is some of the terms you'll be looking at when looking at the banking industry. It's the same thing aside from the regulatory aspect. So once we are looking at the regulatory aspect, we tend to report or look at some items based on the guidelines issued by the regulators. That's the difference. Okay, that's what makes accounting dynamic, regulatory. Basically, you also be looking at the financial reporting standards. So CAMA is even similar to every company, but in the bank you look at other things. The same thing with some other industries. So basically, if you follow the series, we're going to be looking at preparing accounts for various industry companies. For instance, how to prepare accounts for banks, insurance companies, educational companies. We're looking at farms. We're going to be looking at maybe petroleum marketing. We're going to be looking at telecommunications. These are all the same, but terms vary. So I'm going to be doing classes for each of these type of businesses on how to prepare the account. But an understanding of the basics like this will make preparing those accounts to be easy. So I will encourage you to look at this topic, understand it, and then follow us as we give you teachings on how to prepare account for some of all those industries, taking into consideration the dynamics of accounting, which is the regulatory aspect of it. Okay, so if you have issues for this class, basically, you can reach me on 08136506356 or send me an email, jeremiah.doso@gmail.com. Drop questions in the comment section. I'll be there to reply you with answers. Thank you.